Hello, this week we're going to be analysing monitoring cash flow because obviously the cash flow itself is very important when we're considering the cash flow implications that are going to occur within one of your clients' businesses. Today I want to talk to you about the key drivers because they are the engine room of the predictive accounting process. This is the type of budgeting forecast that I sincerely recommend to all accountants to utilise. Based on my experience as a former Chief Financial Officer and Company Secretary of a listed public company, it's very important that when you're preparing budgets and cash flow forecasts, you've ensured that all of the key items are adequately described so that you can be monitoring actual performance throughout the 12 months. Not just at one stage when tax returns are being prepared. Businesses need these forecast documents to be constructed in such a manner that remedial action can be taken when there are variations. And they need to be able to find this as soon as possible. So the key drivers have a number of components. Could include production targets, raw materials inventory, completed stock inventory, projected sales with seasonal variations, debtors, work in progress, creditors are key items, as is research and development projects, capital expenditure, even capital raising. Now you could in fact hide these within the budgets and cash flow forecasts, but I don't think that's a good practice. I like to have them divided into these key drivers so that you can, as I said earlier, monitor what's actually happened, where have the variations occurred, so that you have a key understanding of the impact. Because with things like debtors and stock, great variations can occur and a lot of money can be tied up. And if we're going to be using these forecasts to help in the management of cash flow, you need to be able to dig down and understand what the components are doing. This is an operation that should be undertaken with every predictive accounting process so that you clearly understand how all this relates between the budgets for the individual operations in the business, the cash flow forecast, the projected balance sheet. The key drivers are the linking items which will give you very sound forecasts to use with your clients. Stay safe. Have a great day. Goodbye.